Hello, listeners. Welcome to another episode of the Jacob Shapiro podcast. I'm sorry we've been a little Spartan with episodes lately, but we're revving it up again for you starting next week. In the meantime, Rob and I are back at it for our now bi-weekly chats. This was an interesting conversation. We started talking about the economy and markets and Fed independence, and somehow veered off into the future of religion in the United States and American paganism. So if you want to see how we connected those dots, you'll just have to listen to the end of the podcast. If you want to talk to me about anything you heard on this podcast, you can email me at jacob@jacobshapiro.com. Otherwise, take care of the people that you love. Cheers, and I will see you out there. All right, Rob. It was only 2 weeks ago that we spoke last. Kind of hard to imagine that based on everything is going. How are you doing over there?
Doing very well. I was in the Netherlands last week, which was very cool.
What were you doing there?
Took my kids to Amsterdam and Utrecht and up to the North Coast for a vacation. Very interesting place. Very unique. You can see that it's a true nation in the sense that people are somewhat similar in demeanor and beliefs, and interesting place to go to and very beautiful, especially in the springtime.
I find, apologies to the Dutch listeners, I find that the Dutch are particularly straightforward, undiplomatic, unnuanced. What's the right way of saying that?
One thing I noticed, which I found mysterious, was obviously huge bike culture, especially in Amsterdam. Just thousands of bicycles everywhere you turn, but no one wears helmets. Like literally less than 5% of people wearing bike helmets, which is very different in Paris. Lots of bikes here, but there's a pretty strong norm around wearing helmets, probably more than 50%. And I don't quite understand how that emerged, how you can have so many people on bikes there and not a helmet to be seen. I asked someone and they said, "Oh yeah, well, people just don't think you need them." And I said, "Well, there's accidents all the time though, right?" They said, "Oh yeah, terrible accidents. People get really badly hurt." And putting those two statements together, I haven't figured it out. So
Yeah, that's strange. For any listeners who, I actually feel very strongly about this because a bike helmet saved my life. You should absolutely wear a bike helmet if you are riding a bike out there. I'll use my platform to get on that hobby horse. But that you're not coming to listen here for advice on whether you should wear a bike helmet. You're coming to understand what's going on in the world. So, in terms of what's going on in the world, Rob, wasn't that just a really gentle, natural transition that I made there? The first thing I wanted to talk to you about, I mean, we're recording here on Wednesday. This will probably come out in a day or two. Markets today are quite happy as we're recording. S&P 500 up 3%. The NASDAQ's up 4%. Gold is down, but gold is like floating around 3,400. And I saw JP Morgan, I think, put out a forecast for 4,000 for gold by the end of the year. I was wondering if, maybe it's going to turn now because the JP Morgan guys are sort of into it. But if you start looking underneath the hood at some of the data, things don't look particularly good. And I've still been getting messages from people who normally don't care about markets at all and who are asking me like very pointed questions, like late at night or on the weekends, like, "Hey, should I like sell my like all the stuff in my RIA in my not RIA IRA, but what is the
IRA?
God, I can't do all the acronyms. Should I sell it all and just like go to cash, or should I'm getting those questions from people that normally don't ask me those sorts of questions. And I'm telling them your fears are not like completely unwarranted, but no, I'm not sure that I would do that if it was me. But you start looking at some of the data coming out. I was particularly interested in some freight data and some manufacturing data. So the Philly non-manufacturing index plunged to like negative 42.7. The Richmond Fed manufacturing index fell to negative 13. Craig Fuller is somebody that I follow. He's the founder of Freight Waves, which is a really good freight market intelligence platform. He's been basically banging the drum as if it's COVID again, except without stimulus and without the federal government realizing it. And he's been posting some really like disturbing data points. I sent you some of the trucking data and what that looked like. But another one, if you're just looking at sort of port data from the Port of Los Angeles, for instance, over the last 2 weeks, like We're down 20, 30% week on week. We're down almost 50% year on year in terms of containers that are coming, in terms of imports. And then, amidst it all, you've got President Trump, all the stories coming out about how things are working in the White House. I'm sure you saw the one about how Navarro was at the other end of the White House. So Bessent and Lutnick went in and convinced him to do the temporary reprieve on the tariffs. The tariffs with China up 200 or something percent. But he said last week, or maybe early this week, there's going to be a deal. And even yesterday, he was talking about, this is like, we're not going to be too tough. And Bessent saying that these rates can't be kept up for that long. I guess the question that I'm rambling and leading up to is, does the freight and the port data scare you? Does that tell you that we really are reaching some kind of economic crisis point? And how do we explain sort of where markets are behaving versus the actual data on the hard economy itself? Because it looks to me like the real economy is preparing for disaster, and the market is sort of like, like Trump is joking, like he's going to make a deal, and then everything is going to go back to normal. And I have not been able to square those two things. So maybe you can do better.
Yeah, there's a lot of different areas to go into there. I think the best place to start is to try to create some perspective around this, because the media narrative and the market narrative are on different timescales. The media narrative is very quick. 3% update on the S&P, like, doesn't really matter when you step back and look at the chart. Like, these are all little zigs and zags within broader trends. The way I would sort of address this is, first you have to look at sort of the news and the series of events, which is, markets are happy because, as you point out, they've pulled back some of the rhetoric. They've pulled back, some of the things that they think have been contributing to dollar weakness and the tariff rhetoric, and there's talk of deals and stuff like that, which is, if you were to think of this in terms of a chart, we got oversold and now we're clearing the oversold conditions in a sort of fundamental sense, if that makes any sense. But the broader trend is sort of still in place. I think, we can talk about the fundamentals behind that, but that hasn't really changed in terms of what they want to do, what his priorities are. Even if there's deals, as we talked about the last time, it doesn't really change a lot of the damage that's been done. Um, the corollary that I think is probably the closest in market history to what we're experiencing today is probably the 9/11 attacks, where you had this event that seemingly shocked people out of nowhere. That was a one-time event, but it was creating a lot of uncertainty. People didn't know what was going to happen, whether there would be more damage done, how things were going to react. And essentially, the entire business world kind of clenched and waited it out. And what you had was not disaster, but it contributed pretty significantly to sort of a rollover that was already happening. And, you know, the data heading into this was still okay. It was pretty decent. And this sort of really provided a sucker punch to a lot of that data, and how much follow through we get is still kind of uncertain. But as we said, the only certainty is uncertainty, and that is very bad for growth. And the way it's manifesting most um, clearly is in the trade data, because everyone has just all of a sudden stopped in terms of inventory build and trade and chartering and things like that, because that's all is kind of short. That's the highest velocity macro data that we get. That's like the circulation in the blood of the global economy suddenly coming to a halt. And even if that sort of resumes, and it will resume, like, it's not sustainable to have this level of drop beyond the short term. Um, it's a little bit uncertain how badly that could flow through, because that's a demand shock, a true demand shock, after we had a demand bolus at the end of last year, because, as we talked about, there's a lot of pre-buying, a lot of anticipation of potential tariffs. And now that the actual event has happened and it was much more severe than anyone anticipated, you've had a major swing in the other direction that overshot really far in the other direction. So, this is a major shock to the system, and it remains to be seen how much lasting damage there will be.
That shipping data though, like, do you, the metaphor about it being sort of a COVID-19 style disruption, so you reject that sort of thinking? Like, do you think that if deals do come back, that, or if President Trump makes a bunch of deals, like let's say 6 months from now, 9 months from now, we're talking about the US China phase 2 trade agreement, does that mean that like the genie gets put back in the bottle? Does that mean that the US will be in recession for 2 consecutive quarters by that point, but then maybe it'll come roaring out of the gates there? Like, how do we think about that sort of time period?
No, I don't reject that comparison at all. I think similar to the 9/11 example, it is a similar shock to the system. Um, Whether there will be trade deals, if he comes out and says, "Oh, I have a deal with China tomorrow," I think at the margin that will help. It'll take some of the worst case scenarios off the table because these are real bad scenarios. If you get truly, 240% tariffs on China and that stays in place, which I don't know that people really believe that they'll stay in place. I don't think that's a consensus view, but it's in the price to some extent. Like that's an extreme outcome. If that gets taken off the table, you'll get some relief rally. You'll get people, breathing again. So there will be some positive benefit, but in terms of the kind of mortal damage that's already been done, I think it's really tough to put that genie back in the bottle. And again, the whole uncertainty thing, like no matter what happens, and we were talking about this in our research meeting for Off Wall Street yesterday, actually, talking about how do you approach individual company analysis here because it's very difficult because so many of these outcomes are binary around, what does he wake up in the morning and decide to do? And how do you find sort of non-directional ways to play this? And one of those ways, as we've talked about, is, you want to be long uncertainty. So no matter what happens in the next few months, anyone who's relying on sort of longer term budgeting or cost estimation, like people who are doing long term projects or things that require some level of certainty to get an ROI, like that's just not going to happen no matter what happens. So that kind of stuff is really going to be damaged and it has been damaged. And that's not fixable at this point because that's an issue of responsibility versus irresponsibility and dependability versus the opposite. Um, so yeah, it is very much a shock in that sense, and the overall theme is just again we're in a volatility spiral. Those are inherently very uncertain. They're inherently very difficult to ride, and for businesses, the upshot to this is your margins are going to contract unless you're in a very specific part of the economy or you're very very good at managing this and just timing things correctly. But in order to build in the necessary shock absorbers that you need to be carrying more inventory, whatever it may be, to be managing volatility of cost input shocks, like natural gas was $4 and change a month ago. Now it's under $3. you know, I mean, these things are all over the place. And if you're trying to plan, you're trying to manage your P&L in this, it's just extremely difficult. And if you look at the 70s, what you saw was as inflation went higher and became more volatile, and just the policy environment became more uncertain and volatile, corporate margins contracted during that period. And they also became more volatile as they were contracting. So that's kind of, I think, the default outcome here. Um, and then tying that into markets, I think one of the things that people forget, because everyone getting to the calls you've been receiving, everyone is so overloaded on these mega cap US, primarily tech stocks, that we forget the vast majority of the market has been performing badly for some time. Like, we talk about the S&P. The S&P is down from its peak. It was greatly overbought. So we're sort of just clearing those long-term overbought conditions. And whether we'll, you know, make another run, it's not totally clear. Um, but if you look at the other parts of the market, small caps just made a new all-time uh, low against large caps. So the Russell 2000, which is an index of smaller, more speculative companies in general just made an all-time low relative to the S&P. Biotech stocks, so the biotech index, which is the XBI, if for those who care about this sort of thing, the XBI made an all-time high against the S&P in 2021 during the peak of, truly the bubble, like the peak of this market cycle, and just made an all-time low against the S&P. So they went from all-time highs to all-time lows in the course of a few years. I mean, that's a huge shift in risk sentiment. I mean, anyone who's doing anything in VC can tell you, like, it's not a good time right now. Like, risk appetite is not very good. You'd be hard pressed to know we were in a bull market unless you owned, the Magnificent Seven stocks or this sort of handful of ridiculously overpriced, quality, boring companies. Like Walmart is trading 2 standard deviations above its long-term valuation. Costco is trading 2 standard deviations above its long-term valuation. So people are crowding into these perceived safe names. It's very similar to the Nifty 50 bubble in the late 60s. You saw the same dynamic where most of the market was washing out and you had narrowing breadth into these, big cap stocks. And how long that can persist is sort of the unknown, but without the underpinnings coming from the other parts of the market, it's not a good outlook for those names. And I think basically your base case has to be that we're entering a bear market, even in the large cap areas that have been able to resist it so far.
Sort of apropos that, so another question that you and I have both been fielding from different corners is specifically the relationship between President Trump and Jerome Powell. Probably the easiest thing to predict in the Trump administration was that Trump and Powell were not going to be on the same page. We saw this during the first administration, that Trump was not happy with the Fed chairman. He's been threatening to fire him and then backing off. And then you've got people clutching their pearls about the independence of the Federal Reserve, which is a rabbit hole that I want to go down with you, because I think there is some element of, it's not a constitutional crisis. There are elements of constitutional crisis in what's happening right now when we think about, people getting deported to El Salvador that shouldn't be deported to El Salvador, the Supreme Court saying one thing and the Trump administration doing another thing. Like, we can go down that hole too. But I wanted to specifically talk about the Fed because we've been receiving questions about the independence of the Fed. Questions like, does this mean the end of the period of the U.S. dollar because the Fed isn't independent anymore? And I think I know how you're going to go at this, but I went down a little history rabbit hole with the Fed over the course of last week, because I had this instinct that, of course, the Fed has never been independent. Trump cannot be the first president that will have clashed with a Fed chair. And if you go through history, like recent history, it's pretty cut and dry. Before the 1951 Treasury Fed Accord between the Truman administration, or when the Truman administration was around, Truman and the chairman then, Thomas McCabe, were clashing consistently. And they were clashing in an environment that was much different than the one that we're in right now. The Fed had kept interest rates low during World War II at the behest of the Treasury Department for obvious reasons. But then the war was over and there was sort of a post-war boom. And along with the boom came inflation hitting as much as 21% on a monthly level. Can you imagine if we were in 21% inflation in the United States, how much people would absolutely be losing their minds? And the Truman administration also launched its quote unquote police action in Korea. So then you had war costs leading to even more inflation down the road. And so the Truman administration was trying to get the Fed to keep rates low the way that they had been. The Fed was saying, look, we've got inflation 20%. We've got to raise interest rates. This isn't World War II. Like, we've got to do things. And you get this Fed Accord in 1951 that is really, I think, the beginning of the notion that the Fed should be independent. But if you just look at a couple of different vignettes from what happens after 1951, there's the story of Lyndon B. Johnson literally summoning Fed chairman Bill Martin to his Texas ranch and physically intimidating him in a room and telling him, quote, boys are dying in Vietnam and Bill Martin doesn't care, end quote. You've got the whole relationship between Richard Nixon and Arthur Burns, Nixon pushing for cutting interest rates going into the 72 election and really getting some of those interest rate cuts, which may have helped lead him to victory there. There's the Jimmy Carter-Paul Volcker relationship, which I'm sure you'll want to go down. I also spent a little bit of time reading about how George H.W. Bush felt about Alan Greenspan. Reportedly once said, I reappointed him and he disappointed me, almost blamed Greenspan for losing the election to Clinton going forward. So on the one hand, I want to say, like, look, Trump is not the first president to clash with a Fed chair. Like, why are we all so concerned? On the other hand, like, the Trump administration is doing things on the margin that, they're ignoring the courts in some sense, or they're breaking norms, or they're seizing authority that Congress should take for itself and just doing things with it and saying they're not going to listen to Congress if Congress takes it back. So that's a nice setup for you to talk about your favorite guy, your guy, Jerome Powell, and the Fed, which I'm sure you have thoughts about.
I do love Jerome Powell.
I know. He's your boy.
He is my boy, and in many ways, I think this is the illustrative conflict of everything going on now, because Jerome Powell is the epitome of responsibility and selflessness. And I know I'm sort of lionizing him a little bit, but if you really look at his biography and his background, this is a guy that could have been making tens of millions of dollars a year doing different things, and went back into public service, essentially started from the bottom and learned the trade of doing public policy, and ended up becoming Fed chairman because he's, a very driven and sort of a diligent individual. So all the things that Trump is not, in terms of selflessness and things like that. So if Jerome were to go, under the axe, I would see that as a major negative sign. But yeah, historically speaking, I guess what you say is 100% right. Like, history is littered with these conflicts emerging because it's a natural conflict between the bureaucratic Fed, and I mean that in the true sense of the word, like non-elected officials doing something that they think is supposed to be based on technical judgments rather than elections, and the presidency and the Congress. The difference is really two things, and this gets into sort of the whole kind of resilient portfolio strategy that we've been really focused on at Bespoke, and sort of why it's different. The difference is, compared to those historical examples, is the amount of debt right now and the level of the deficits. Because ultimately, when we're talking about money printing, you're talking about who is going to bear the cost of debt and deficits. And that is a much more tangible problem right now than it has been in the last 100 years, because the US debt just wasn't ever that big, with the exception of right after World War II, when I think debt levels got to around 116% of GDP, which is, by the way, about where they are now. And we're not in a war. We're not in a total war situation, just to show you the extent to which things have changed. Um, but then, effectively, as you pointed out, the Fed and the elected government was on the same page, which was, okay, we're going to have to make wealth holders pay for this debt. And they did that by allowing inflation to run very hot and keeping interest rates way lower than they needed to be to combat that inflation. So effectively, the people that owned the bonds of the government, the value of those bonds was inflated away, and that was a good thing. That was probably the right thing to do under the circumstances. Now we're in a similar situation where debt is roughly around those same levels, and the government is running significant deficits for reasons that are not related to existential total war, avoiding a Nazi global empire, for reasons that are much more mundane and kind of petty, in many ways, in terms of like truly the severity of what's causing it. And that's where the conflict comes in, because effectively the Fed is there to protect the value of money, to protect not only workers, they have this balancing act, but also to avoid runaway inflation. That is arguably the more important part of a central bank's mandate. So at the end of the day, this is sort of a question about who's going to pay for all this irresponsibility and debt. Is it people who own financial assets or bonds, and those bonds are going to be inflated down in terms of like a backdoor seizure of the wealth? Or is the Fed going to be like Paul Volcker and defend the value of the currency, and defend the sort of sanctity of wealth to at least some extent. And that's sort of the battle that's playing out as I see it. And usually, I wouldn't hold out much hope for people with great wealth or who hold, large amounts of treasury bonds because, as you point out, politics and the Fed usually are in alignment. Jay Powell is not going to be around forever, and typically you only get a public appetite for sort of hawkishness when inflation has gotten so bad and ordinary people have gotten so screwed by it that there's a public demand for someone to step in and put a stop to it. And I'm not sure if that exists quite yet. Um, Clearly, Trump is the elected president and he has the opposite view. He's not calling for hawkishness. He's not been elected to make inflation go away, first and foremost. At least his actions are doing the opposite.
Well,
So,
he was arguably elected to do that. Like, you could look at the opinion polls. Like, Biden lost. I know everybody wants to blame it on his interviews and his his old age, his senility. But the moment when Biden really tanked in the polls and when things started to go wrong was summer of 2022, when inflation was picking up and gasoline prices were going up, and a can of Campbell's tomato soup was going up 20%, like that. Like, and Trump was the one who said, I'm going to fix inflation immediately. And I feel like we're also in this strange space right now where we alluded to this last time, where the data is telling us that prices are technically going down, but prices are only going down because everybody's expecting the economy to basically cave in on itself. Like, it's sort of, you had the inflationary spike and you've already had a move towards a deflationary period. So I think he was elected to do that, and I think you can see that people are starting to turn on him. There was a Reuters poll just this morning asking what Americans think of Trump's performance on the economy. So this would be for the week April 16th to April 21st. On the economy, 51% of people disapprove of his performance versus 37% that approve. That was why Kamala lost right there, because when you asked that question, like literally 12 months ago or 8 months ago, Kamala was getting the only 37% think you can do it, and Trump is the one who can actually manage it. So I think he might be in trouble there too. Maybe there's a saving grace for Jerome in the background.
yeah, I'm a little skeptical of that. And I think you and I disagree about the importance of economic versus cultural factors in Trump's reelection. Um, I think it's very easy to conflate those two things. And when you ask people, what do you dislike about the Biden administration, and lay that in front of them, they're apt to choose it. But um, if you ask the average person if they were willing to lose their job for 6 months to end whatever inflation they may be experiencing, I think that's a different question. And I think if you
Mm-hmm.
look at the average American and how they have been doing financially in the last couple of years, you don't get the impression of that things are going to hell in a handbasket. You get the impression of that it's been party time for most people. Not people who have Campbell's soup and eggs as a significant part of their purchase basket, but basically people who are everywhere else in the income spectrum have been doing very well.
Mm-hmm.
So, I think we'll just leave that there and people can kind of decide which factors they want to weigh more. But, I would be looking for signs of responsibility, signs of, hey, someone needs to step in and they have a public mandate to give the hard medicine. Um, and I'm not really seeing that. That's what I think you'd have to look for Jerome Powell and people like him to really have be in the driver's seat of what's going to happen. Um, yeah, I don't know.
Well,
I see
and
the opposite.
yeah, I mean, I hear what you're saying. I mean, he's in a very tricky position because he's, first of all, he's not elected. Second of all, like, the inflation data is not telling him that he should be raising rates necessarily right now, but it's also not telling him that he should be cutting rates. Like, this goes back to the Fed just not having the tools necessary to achieve its position. If the White House is going to be doing things diametrically opposed to what the Fed wants, which is keeping things stable, then, like, there's obviously going to be a clash there. But yeah, there's also so much. There's only so much they can do. Like, I'm not sure. Well, let's actually take that hypothetical. What would happen if Powell acquiesced? Like, what happens if he cuts rates because he's worried about the state of the economy over the next 6 to 9 months?
Complicated question, because I think if he were to do that, it would be pretty negative for the dollar, um, which would have, clearly some inflationary impacts on its own. Whether it would really jumpstart growth is kind of a big question. Um, Remember, he can only control the short-term rate.
Hmm.
What would the 30-year mortgage rate do if Powell bent the knee to Trump? Would it go up or down? I don't really know the answer to that. It might go up. You might get rate
It
steepening.
probably would go up, right? Because the rates are already steepening on the longer term. So wouldn't that just exacerbate it?
I think probably it would. So, in many ways, it would likely have the negative effect. The instability and the uncertainty effect would outweigh sort of the traditional, you know, income, the interest rate channel approach that most people think of. I think
Hmm.
would be most likely.
Well, and so let's take the counter then. So what if he raised rates? What would happen?
Hard to say.
Would the dollar still continue to go down and yields would continue to go up in the long term? Because that's I mean, we're still, like, to your point about the media narrative being so small and these zigs and zags, like, the bigger narrative here is since Liberation Day, dollar down, yields up, gold up, Bitcoin up. Like, and that's still continuing.
Yeah, I don't know because he doesn't have a strong reason to raise rates right now. So it's hard for me to even like if he were to do it, it would be for some reason that we're not considering. Like, hey, the dollar's really weakening and they feel the need to use the interest rate channel to attract foreign flows. Like that's like what an emerging market central bank has to do. That would be in a we're not at that point yet. Like if that's the case, you'll be over here in France with me and we'll be talking in person because things will be at that point. Um so yeah, I think it's hard to imagine a scenario which given the current environment economically that they would aggressively raise rates because it's just all of their rules and sort of frameworks for thinking about this aren't pointing in that direction. Um so yeah, I'm gonna have to punt because I just don't know.
Yeah. Okay. Anything else you want to say on Mr. Powell before maybe we turn and look at some of the other things happening in the rest of the world?
Um no, other than just to point out that this is I think it's gotten a lot of attention because of, all the comments that have been thrown back and forth in the last week or two. But it really does deserve great attention even when the media narrative moves on. And I think this is the thing to really watch. And we've talked about this, over the course of the last year. Um, I would keep a close eye on this and the relationship between the executive branch and what's going on at the Fed because, history teaches us that inevitably facing the trade-offs that, the administration faces, they're going to try to turn to the monetary side of things to get easy fixes. And if that happens, that'll confirm a lot of our major theses. And it may not be super obvious that it's happening um, until it smacks you in the face. So definitely don't lose sight of this, and I don't want to downplay this. And I do think it is the representative conflict of a lot of things going on.
Hmm. Okay. Turning to some other things happening in the world. I mean, there's no shortage of things in some sense. Um, I was looking at our shared knowledge platform, and I mean, I like taking the temperature in Paris recently on the podcast with you. I saw some of those polls that you posted about how the far right in France might actually be doing poorly because of its association with Trump, and we're actually seeing this in a bunch of different elections and polls throughout the world. I mean, if you go back even 2, 3 months ago, it was almost a layup for the conservatives to be back in power in Canada. Now it looks like a toss-up over there. You've got the far right now in parts of Europe maybe being discredited by their association with Trump. Do you think that's a flash in the pan, or do you think there really is like a political reorganization or almost a fracturing in the global right narrative? Because there's been this kind of strange ideological affinity between, and far right is really the wrong term for it. I don't know that we have a good term for what we're talking about. It's really sort of populist, culturally conservative, anti-migrant. I don't know like how to describe like what this group is. It's certainly not what the French meant when with the left and the right and out of the French Revolution. But I thought that was a pretty striking indicator that you posted.
Yeah, far right is a funny word for it because even though they have a lot of the same rhetoric of the traditional far right parties, they're not really that. They're much more similar to Trump within the American context, I think, in that they thrive on irresponsibility. They thrive on this kind of carnivalesque approach of we're going to poke in the eye all the responsible traditional politicians because they're these out of touch elites and we don't like them and all these sort of reasons that just appeal to people. And I think that is what explains why they're suffering right now because irresponsibility in Europe and Canada and other places is out. In Canada, because irresponsibility is associated now with their enemies, the Trump administration literally threatening to make them the 51st state and all these things that rightfully piss them off. And in Europe, I think because they've had enough irresponsibility in recent living memory, um, and that's never going to have the same kind of mainstream appeal as it might in America, which has sort of been riding on some complacency, because it's had it really quite good for the last 100 years. So, when I look at in particular in France, because that's the one I'm most familiar with, if you look at these people, they have no ideas. They don't have a platform. Like if you look at the RN, their platform is basically a bunch of like shiny slogans and this Jordan Bardella like shaking people's hands and it's like you could fit their ideas on a single page. Like the ideas are screw the mainstream and we're gonna we're gonna take back the power, like blah blah blah. Um, they are the party of anti ideas. I think that's their main idea. Like and that's a tough sell in an environment where you feel threatened by that in the form of the United States.
I also this is going to be a really torture, and I didn't actually tell you that we were going to talk about this beforehand, but this is sort of a tortured link to what you're talking about, and it's kind of the through point of the entire thing that we've been talking about today, which is sort of culture versus the economy. But Pope Francis died this past week, and he was a pretty big lightning rod in this larger conversation, I think, about conservatism, its place in the world, conservative politics versus populist politics in general. Um, France is a very Catholic country. You hail from a part of the country that is much more. I mean, I'm sitting here in Louisiana too, so one of our favorite things to talk about back in our Stratford days, like it was never that important because 200-300 years ago the geopolitics of religion was incredibly important. Now, like the Vatican, like nobody actually listens to the Vatican on things that matter. But I wonder if there is sort of something in who they're going to choose to replace or to take the place of Pope Francis. Like I think that'll be a really interesting choice, and it might tell us something really interesting about one of the most conservative institutions in the world, and which literally billions of people look toward. Because in some ways, Francis was, I don't know, a counter to conservatism, also a counter to a very Euro United States centric institution, like going to South America, picking somebody like this, picking somebody who talked about the dignity of all human beings and not, all those other sorts of things. So I'm sort of half expecting like the Vatican to be a mirror to everything that's happening in the world, that we will get some kind of reactionary is too strong, but you know what I mean? Like a figure who would fall in this little far right bucket that we're talking about, because it's hard to imagine like today, if Pope Francis hadn't just been the Pope, like let's say it was Ratzinger had stayed in place and we were still, and he was the one who had passed. It'd be hard to imagine today that the Catholic Church would have chosen Pope Francis today. Like it's almost a reflection of a very different world, and I'm really curious to see who they pick next, just because of what it says about the world. Anything you want to say about that?
Yeah. I think it is very contingent on who was before, because Ratzinger was such a unique figure. Um, and just to be clear, I really admired Ratzinger. I thought he had no popular touch at all. He was a total nerd. Um, but as a theologian, he was a really great thinker and like a very interesting figure that I think is underappreciated. But he definitely represented a very specific part of the church. And then, you know, Francis was obviously to some extent a reaction to that and sort of a realization like, hey, and he became pope during a very different time, um, culturally, and it wasn't that long ago, but I hate to say it, it was a long time ago in, cultural terms already, given how fast things are changing. So, I think there's a great element of contingency there. Like, I wouldn't be surprised if there were a more conservative figure that did come in simply because, you know, there's been more kind of cachet given back to some of those more conservative ideas, uh, traditional family values, that sort of thing. So, yeah, I mean, to some extent, I would expect that, but the broader thing here is, like, in the Catholic Church, how are they going to update, if at all, to, some more mainstream views, which I think is something that's kind of happening somewhat separate to some of these other more political things. The other thing I would comment on is I don't see a strong link at all between what we call conservative or far right politics in many of these countries and the kind of conservatism that the Catholic Church represents. I almost view, Trumpism and, the RN and similar parties almost more like nihilists, in the sense that they will use some of that language and jump on that bandwagon for their own ends. But ultimately, their reason for being is not to institute those values, but to destroy whatever they can in order to self-aggrandize. And it's sort of these, um, I don't know if Trump gives a two shits about any of these things or the RN, or people like that. So I think it's easy to lump all of these people in and, oh, these are conservatives, but really, like, the Catholic Church and those sorts of issues, I view as more like traditional, you know, not center right, but more traditional right wing, issues rather than what we're experiencing right now, which is something that's sort of metastasizing and eating a lot of that traditional right wing, but it's fundamentally kind of opposed to it.
Yeah, Ratzinger. I guess I should call him Pope Benedict XVI if I'm being polite. I was just looking up his dates. He was the Pope from April 2005 until February 2013. So that was a very different world. Like when he became Pope, there were no iPhones yet. I guess we were after September 11th, but we're before the financial crisis. We're before Russia invaded Georgia. We're still really at the like giddy springtime of globalization and things like that. And by February 2013, at least the shadows were on the wall by then. Xi Jinping comes to power roughly around that same time period. Russia has already invaded Georgia. There's going to be the first Ukrainian revolution coming in 2014, like the world becoming a very different place around him. But to your point, though, I feel like if you look at the way that people are talking about culture these days, it seems like at least, and maybe young people always feel this way. Maybe we just have more of a pulse on it because there's social media and all sorts of, people are asking questions all over the place, and everybody has a new poll that talks about how people are feeling meaningless. But there is, correct me if I'm wrong, I feel this sort of narrative current in everything that's being talked about, which is people are in search of meaning, that they have lost meaning from traditional places, and that there's almost not a resurgence of religion, but like there is this, like people are interested again in some of these things because it does give you some kind of meaning outside of the rat race of whatever is happening in life. And one of the reasons I wanted to bring it up in context with what we were talking about earlier with culture versus the economy, because if you're right, like this is a really interesting moment for the Catholic Church. You have all of these different people around the world in a time of it's a volatility spiral. The United States is declining as the top power in the world. There's doubts about the future of the global economy and about where we're going and the future of demographics, all these other different things. Like you would think that this is a prime moment for an institution which is ultimately about the manufacturing of meaning to reinsert itself in a major way. And in some ways, Francis did that. Like, he made the Catholic Church relevant in a way that it hadn't been during Benedict XVI's sort of, as you put it, what he wasn't very charismatic during his insular theologian papacy. But yeah, in some ways, the world also passed Pope Francis by, because he didn't make a lot of the changes that maybe people thought he was going to make. He didn't step on doctrine as much as he did. And how much did he broaden the appeal of the Catholic Church? I'm not sure. Like, I think it's going to be a really interesting sort of point in history to see what direction people are going in. And there's also a break here between, the College of Cardinals deciding all of this in a conclave, like thinking that they have their finger on the pulse, while the rest of the world is out there like experiencing all these other different things. That was the main thing about Francis. He literally died like going out into the world, meeting people and trying to understand what was going on, which is not something the church is famous for. So I don't know.
I mean, you talk about a resurgence of religion. I mean, that is quite literally happening. If you look at the polls of young people, associating themselves, with belief or church attendance or things like that, there's been a rebound in the last. I don't know how frequently the polls are taken, every 5 years or 7 years or whatever, but for the first time, I don't have the data at my fingertips because I didn't know we were going to talk about this. But for the first time, really in modern memory, there's been an increase again in all of those metrics that they track, which is pretty extraordinary. And I think you're right. People do seek meaning, and they seek, if you do take my interpretation of Trumpism and, a lot of these movements as essentially nihilistic movements, as essentially like, uh, you know, uh, movements that are counter to the traditional um, values of any kind, that they spur sort of a search for some kind of structure, some kind of meaning. It sort of makes sense. Like it's sort of like in the post World War II environment, where you had all these Christian democratic parties, of the center right, sort of have such great success in places like Germany and in Italy, where you just had these terrible, bombed out, shell shocked, literally, societies kind of seeking some kind of something to hold on to and provide some structure. Like you might be seeing a similar dynamic there, just in a broader sense, because it's not just in one geography. It's kind of in lots of places all at once.
As you're talking, I was trying to find some data to back up what you were saying about a resurgence in religion, and it's not so simple. But here's an interesting sort of data point, and maybe we should bring somebody on to talk about this, because I didn't even know that this was happening. This is obviously now veering away from Catholicism, more towards typical American evangelical Christianity or Protestant Christianity. But so um, church membership has been dropping in the United States for years. We know that. Within Gen Z, 40% of women describe themselves as religiously unaffiliated, compared with 34% of men. And that apparently is a huge sea change. It's the first time since they've been doing this data that men have been more religious or more affiliated than women have been. Generally speaking, it's been women who at a higher rate are affiliated with churches or with religion, and men less so. And it's flipped for young men in the Gen Z category, which goes a little bit to what you're saying, like, and it goes straight to what you were saying about culture, like the guys who are listening to Joe Rogan and the guys who are admiring Trump being a mover and shaker. Also, the guys going to church, like trying to find meaning because they're not finding meaning in the current context of what it is. And maybe that has something to do with the decline of prospects for having a job where you use your hands, or in an environment where inequality is higher, or where there's this, women want to have fully actualized careers and are prioritizing that over sort of families, which doesn't, like, great for them. Like, I'm all for that. But like, men are also sort of programmed in a different way to do different things. And now you're taking away the thing from them they were programmed to do. It makes sense that they're sort of spinning out and trying to find meaning in these other groups. So just an interesting data point to say that young men are affiliating with churches at a higher clip than young women, at least in the United States.
Yeah, I mean, it could be the church. It could be Stoic philosophy. Like you see a lot of anecdotes of people embracing systems and frameworks for life in a way that they maybe didn't 20 years ago.
This is a really interesting Google rabbit. I googled resurgence and religion in the United States, and one of the top responses is, although many pagans tend toward more individualistic religious practice, many American pagans have begun to gather more, often in person and over the internet. So paganism back 2025.
Damn.
Yeah, there you go. Anything else you want to touch on, Rob, before we get out of here?
No, I don't think so. We'll leave it on the paganism.
Okay, sounds good. Have fun worshiping trees out there. We'll see you later. Thank you so much for listening to the Jacob Shapiro podcast. The show is produced and edited by Jacob Smulian, and it's in many ways the Jacob Show. If you enjoyed today's episode, please don't forget to subscribe, rate, or leave a review. It takes just a couple seconds of your time, but it really helps us. Also share with a friend. If you're interested in learning more about hiring me to speak at your event, or if you want to learn more about the wealth management services that I offer through Bespoke or Cognitive Investments, you can find more information at jacobshapiro.com. You can also write to me directly at jacob@jacobshapiro.com. I'm also on X for now with the handle Jacob Shap. That's Jacob, S-H-A-P, no dats, dashes, or anything else, but I'm not hard to find. See you out there.